And now it's time for markets. This week I'm joined by Darin Fessler with Lakefront Futures and Options. And as we just mentioned in our last story, favorable weather has allowed farmers to get their crops in the ground at a breakneck pace. Corn emergence was reported at 88% and soybean emergence at 73%, both ahead of the 5-year averages of 79 and 47% respectively. I started my interview with Darin by getting an update on crop conditions from around the state.
So far, I'm not too concerned with what I'm seeing across Nebraska. Obviously, we have some issues in North Dakota that are going to linger on. But as far as Nebraska is concerned, I think it went in the ground relatively good in a quick, timely pace. Obviously, we had some recent rains here that were probably a little bit too much for some producers. But all in all, I think that, we may have to replant some of that. But, all in all, right now, I think it's weather-driven markets and really the headlines, what China may or may not do in the Hong Kong situation. But right now, the conditions are pretty good in my estimation.
Yeah, it leads into my next question because, things are looking good. Emergence is ahead of schedule, but then that's overshadowed by the effects of COVID-19. Then you have the trade uncertainty between the U.S. and China. So how's the market been responding to all that?
Yeah, I think it's one of the things where the market's brushing it off a little bit about the whole China-U.S. relationship. I think it might be a longer-term story that plays itself out. But right now, you look at what China does and not what China is saying, and I think that's going to be the indicator of what the market's looking at. Because even when China was saying, we're going to stop buying your pork, we're going to stop buying your beans, well, at the end of the day, they were really buying our beans and still need our beans. And I think that's a story that's going to continue to play itself out here and continue to fuel a little bit of this bean market here as we move into some more weather patterns here, as we maybe move later on in the growing year. If those weather patterns do pan out, let's say we run into some weather issues, that's much more favorable, I think, to beans right now than it is corn. And regardless of what the current environment is with the U.S.-China relationship, if they need those beans, they will step in and buy those beans. I'm fully confident of that.
And yeah, let's look at pricing for a minute. With everything going on, could you give us a price forecast for marketing 2020 corn and soybeans? What do you think?
Yeah, I think right now, if you look at the November beans, we're somewhat in a trading range here. We've had decent volume here this week, and if you look at where the 50-day moving average is, if we can start getting some momentum above there on some good volume, that's really going to be indicative of what the future prices are going to do, especially for the bulls here. Now, on that November bean chart, we still have a gap here right above $9 at basically 903.5. I think that right there is a target for this market. I'm a believer that gaps like to get filled sooner or later. November's a long time away. We're still dealing with early June. Anything could happen to this stuff right now, but if you start to see weather come into play, you start seeing China come back into this market in a meaningful way, we're not very far from $9. We could get there in a couple of days if the market gets really spooked here, and hopefully it does. But right now, I'm targeting some much higher levels in these beans.
And I know that you're a big ethanol guy. We've had you on a couple times. Haven't had too many ethanol questions yet, so excited for your thoughts on this. So when you look at ethanol in terms of pre-COVID numbers and then look at where they've been over the last couple of months, what are you seeing and what do you think is going to be that sign that we've normalized again, if that's even possible?
Yeah, pre-COVID to where we are now, things that continue almost on a weekly basis continue to get better. Especially we're opening more businesses up, the country's starting to open up a little bit more, and we're getting into that summer driving season as well. And people have been cooped up, they're in the house just to get out and drive. They may not be going anywhere. They might just be driving around in a big circle, but they're going out and they're driving. So that's really encouraging. I think the biggest thing with ethanol right now is, what does the USDA do with their numbers as far as ethanol production and how much corn are we using, not using, because that period of where we really had a bulk of that country shut down, we lost a lot of that production. So to really ramp that up in a meaningful way, to get back to where we, pre-COVID, it's going to take some time here, but I'd like the direction where we're on here. You look at not just ethanol, but look at fuel usage, look at airline fuel, look at airline travel. So we're getting out and we're getting more and more active as a country. So we're going in the right direction. It's just what kind of setbacks will we have maybe from the USDA if we're thinking, did we lose 500 million bushels? Did we lose 1 billion? I think those numbers are still really wish-washy in a lot of analysts' minds and opinions right now. I think we just have to continue watching these trends on a weekly basis here. I think we'll be okay, especially if we run into some weather here, which, somewhat we almost need a little bit of a weather hiccup to help the corn out market a little bit. But right now, I like the way the ethanol is moving.
And finally, any marketing tips or risk management advice, any selling strategies, anything at all like that you want to mention to us?
As we get into more of a seasonally bullish pattern for both the corn and the soybeans, is if you've been undersold or underhedged in this market, is just to establish some targets here and not get too crazy with the upside, because volatility is still relatively low here. If you're stepping in selling calls here, I still would recommend just being very cautious because volatility is low. Wait for those volatility spikes. Buy some puts, sell some callers, do some collar type strategies to establish some type of floor when these rallies do happen. Be in close contact with whoever you're working with, but just have some targets in here is really the key thing here moving forward here, especially over the next probably 2 to 3 weeks.